Welcome in the world of currencies, of stock market, properties, finance and economy. USD dollar is falling and falling and falling. You don't hear that in US media. You will not see that in US media. You will not see that in Anglosphere media. You will not hear about it in England. You will not hear about it in UK, in US, in Australia, in Canada. You will not hear about it. US dollar is falling. US dollar is probably falling as in 2007. British currency, pound, is falling even lower than in 2007-8, probably. Probably British people need to lower British pound value to not major currencies but emerging markets currencies, because emerging markets are getting stronger and stronger. UK economy is weak, not because of the war in Ukraine, no. It's because of the Brexit and many different things. The rest of the world is building, is growing. Economies like United States, like European Union, like United Kingdom, which is actually small country. United Kingdom is a small country. United Kingdom, England, UK is the size of Lithuania and Latvia. England is the size of Lithuania and half of one and a half of Lithuania size. This is what I'm going to show you now. Will get you to the next level. Of course, it could be a mistake, but nothing shows that we are going in a different direction. We are going in a direction that, you know, British economy must recover. British economy must get transition from its state after Brexit, from this where British economy was when they been in European Union. British economy is losing, but they need to transform. So they need to get on. They need to lower British pound value for even 5 or 7 or even 10 years. So the economy can recover, because they need investors that will come buy cheap currency, cheap British pound, and they will invest in British economy with good, healthy administration, but with cheap currency, with cheap assets. Because when the currency is cheap, then assets are cheap. British economy must get on with the transition. They need to change, because they left European Union, and you know, you see, this is what happened in the beginning of 2020, and situation in Ukraine doesn't play a big role. In British situation. Of course, it plays big role, but anyway, Europe was left by British. British get out of the Europe, so they have to change. British economy was built since 2004, 2005, 2006, 2007. With the help of very cheap labor. Well, with the help of millions of people, like from the Central Europe, like Lithuanians, Latvians, Polish, Slovaks, Hungarians, even people from Czech Republic, they went to UK and they built their economy. That's why British economy recovered. But now it's the end of strong young people in UK. There is no this force of hard-working people, and now they need to get transition to high value products. They need to be what, like Japan, but they different than Japanese. British education is different than Japanese. They are not the same. Japanese are workers. They work. It's many people, you know. They behave different. And British people are like in the way that they need to make business. They need to employ people. They need to make people on monies. Make monies on people. They are not. British economy is not. It's not like German economy. British economy is not like Japanese economy. British economy is not like Korean economy. They don't have much there. London collapsed as a European. London collapsed as a European financial capital. Paris took over. Paris with really like Paris. It's Spain. France is Spain about their rules, about the administration, about doing business. However, France overtook London's position because they get out. British people didn't think that, oh, okay, that's not possible. London will go back behind, I don't know, Paris, Warsaw, Frankfurt. They thought that. But why European Union would want to have London as their financial center? They get out. They get out. That's that's funny thinking, you know. You get out of the club and you want to be in the club. How? And you want also all the benefits of the being in the club, but not like paying to the club. No ticket, no club. I'm sorry, I need to take a sip of coffee. Let's look for these charts. Look. Look. USD PLN. Why I'm showing you PLN? PLN is in Europe. We've got in European Union. We've got, of course, British pound, and we've got euro, and we've got few more currencies like Danish crown, like Swedish crown, like Norwegian crown, like all crowns, like Czech crown. Like a Hungarian forint. However, none of this is as important as Polish zloty. Probably Polish zloty is the most important currency in the European Union after euro. It's obvious. Poland is 40 million people, and now there is additional 3 million people from Ukraine. Also in the European Union countries there is around 5, 7 up to 10 million Polish people, and people in Europe use Polish currency a lot. Yes, a lot, because Poland is producing a lot, and they need Polish currency to exchange, blah blah blah. And this is a good example to show you what is happening with US dollar, and this is nothing bad. It's just thing that happens, and it happened already in 2008. Look, this is chart USD against European Union currency. The European Union currency, one of the currencies. And look for this. In 2005, Even in 2000, dollar was almost 5 Polish zloty PLN, and from this point it got to the bottom to 2 PLN. USD got from 5 to 2. It lost 150% of its new value. It's lost from 5 to 2. So the old value was 150% more than the new value. And it took few years to get to this point, to 2 PLN. And then, of course, USD dollar got up to almost 4, and then got down, got up, got down, got up, and that was perfect moment for making money as crazy, because you buy cheap, you sell expensive. You buy cheap dollar, you sell expensive. They buy cheap, they 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 sell. And you make money just by buying cheap dollar and selling then expensive dollar for this European Union currency. And what is happening now? It is almost the same situation like in 2008, 2006, 2005, but a little bit different, of course. But where United States is going? They are going to cut USD value. It can happen if the European Union and Polish state will choose wisely. It can happen that, look, now dollar just few months ago, 2-3 months ago, the value of dollar was 5 zloty again. You see, 22 years ago, it was 5 zloty, and then it got down, it dropped to 2 zloty. It dropped to 2 zloty. Can you imagine? Can you imagine? It dropped dramatically. And now it's a mirror case. It's like a mirror case. It is like a mirror case. Look, USD dollar got very expensive, and now it's dropping. Even that Fed is rising the interest rate. Yes. Today, interest rate in United States is 4.75. However, dollar is dropping. Dollar is falling. Because interest rate in Poland is also high, it's 6.75. But in Poland, they don't have fixed rates so much like in United States. Look, even if dollar will not go down to its value from 2008, it can go down, it can drop to levels from before 2015. Before 2015, dollar was very cheap. The value of dollar was only 3 zloty, 3 PLN, 3 only. Just 2 months ago was 5. Dollar was very cheap, even 2.7. Look at this, 2.6, 2.7 for a very long time. And this is what is happening now. This is what is happening. This state is sitting. Polish state can still lower the value of Polish zloty, or they can stop putting interest rate down. They can stop inflating prices by giving money, etc. You know how they do that. They may not proceed with quantitative easing anymore. So Polish zloty can go back at least to 2014. So dollar will be 30-40% down from its value, today's value. Today's value. However, you know, now situation around the world is different than in 2008. People are different. There is internet, there is knowledge, there is people know, and people don't want any more US dollar. They don't want. They don't want it. They don't want it. They prefer gold. They prefer silver. They prefer Bitcoin. They prefer cryptocurrencies. They prefer properties. They prefer land. They prefer stones. They prefer to invest in startup. Yes, and it's quite wise. It's quite wise. But dollar is expensive. If you buy dollar, you can lose 10, 12. I'm sorry. If you buy expensive dollar, it's not an asset now. Dollar is not a good asset now for nobody. Because if you buy expensive dollar, you can lose 10, 20, 30 or even 40% just because the value will go down. On the top of that, interest rate is very small. It's nothing, it's only like 4.7% a year minus taxes. It's nothing. It's nothing. They printed so much money, that gold can go up even twice from its price. From its current price. Look. It's over with but but dollar can go up to down to 2 zloty. It can go down to 2 zloty, ladies and gentlemen, and nothing will happen. And then dollar will recover, will go up, probably will recover. Or will not. Yes, it's the same history. Of course, China can be too strong, Russia can be too strong, India can be too strong, Brazil can be too strong, Africa can be too strong. They can be too strong. Dollar is weak. It's weaker than in 2008. It's weaker because people are smarter. You've got all these brokers with the Forex and everything else. People now are different. Look for gold. Look for gold. Gold almost 10 years ago, more than 10 years ago, was already had today price. The value of gold was the same as today. However, 12 years ago, there was no much money around. There was no so much printed dollar. There was no so much printed euros. There was no so much printed Polish zloty. There was no so much money around. For last 10 years, 12 years, money was cheap. Loans, mortgages, 0%, none, zero, nada, zero, nothing. Money was cheap. Money been created in really like in imaginable quantities. Probably we cannot measure it. And ask yourself, if gold 12 years ago, when there was no so much credit, loans, mortgages, printed money, bitcoins, or others electronic currencies, so why gold is today only 1.87k in US dollar? If today we have 100% more money around the world, or even more, we wouldn't be angry if gold price would be today 4,000, 5,000, 6,000. Of course, be careful. Don't take it for granted, because dollar can go down. Gold can go down. Price of the gold price can go down so much that can, ruin people that they buy so much gold just in one time without the diversification. They can lose money, etc. Because gold can go down like this, and you can lose for 1, 2, 3, 5, 7 years or 8 years some of its value if you exchange it back to currencies. However, taking that there is so much money around the world and people love gold now, gold could be as soon as possible 4,000, 5,000, 6,000, 7,000. Paper is just paper. Thank you very much. Give me subscribe, give me thumb, comment, and say what do you think about current situation, about gold, about US dollar, about situation in Great Britain. Do you think that British people must go for decreasing their currency value, for they must go for the same what they did in 2007, 8, 9? Thank you very much. Subscribe, like, and comment. Bye.